Welcome to our deep dive into the world of Affirm Holdings, Inc. You sent over excerpts from the recent 10Q filing for the quarter ending September 30th, 2024.
Right.
Let's be honest, these filings can be a bit of a head-scratcher.
Oh, yeah.
Even for those of us who, kind of follow this stuff.
Absolutely.
But you want to really understand what's going on with this buy now, pay later giant.
Yeah.
And we're here to help you do just that.
That's right.
Good.
We're going to break down those complex numbers,
Okay.
highlight the truly interesting bits, and connect the dots.
Perfect.
So you don't have to feel lost in a sea of financial jargon.
Now, just to make sure we're all on the same page,
Okay,
let's
no.
quickly recap what Affirm does.
Yeah.
They're all about making those big purchases a little less scary by allowing consumers to split them into smaller, more manageable payments.
Yeah. It's all about giving those shoppers that breathing room at the checkout.
Right.
But they're not just another lender.
Okay.
Affirm really emphasizes simplicity, transparency, and putting their customers first.
Okay.
They really want to demystify the process and make it super easy to understand.
And they've harnessed the power of technology and data to do just that.
That's right.
Their own risk model and scoring system allow them to assess creditworthiness and tailor financing options to each individual.
It's a far cry from those old school credit scoring methods.
Right.
They're not just blindly approving or denying loans. They're using data to make smarter decisions.
Okay.
And that's a major part of their competitive edge.
Okay, so let's zoom out and look at the big picture of Affirm's quarter.
Right.
The headline number is their total revenue,
Uh-huh.
which reached a hefty $698.479 million in Q3 2024.
Wow.
That's a significant jump from $496.547 million in the same period last year.
That's right. But there's always a but with these things, right?
Always. So spill the beans. What's the but this time?
Well, despite the revenue growth, their net loss for the quarter landed at $100.2 million.
So not all sunshine and rainbows then.
Right.
But before we get into the nitty-gritty of why that is,
Okay.
let's focus on a definite positive. Their active consumer base.
Yeah.
That number grew by a healthy 15% year over year.
That's a big deal. It shows that more and more people are turning to Affirm for their shopping needs
Right.
and liking what they see.
Okay.
It speaks volumes about their ability to attract and, more importantly, retain customers.
Now let's peel back the layers of that revenue and see where it's coming from.
Okay.
The bulk comes from what they call merchant network revenue. Essentially, this is the fees they collect from merchants for using their platform.
Think of it like a commission they earn for bringing buyers and sellers together in a seamless way.
They've also got card network revenue rolling in, which comes from those interchange fees
Right.
generated when folks use their virtual or physical Affirm cards. This part of their business actually saw some impressive growth, a whopping 42% year over year.
Yeah. This is fueled by the growing popularity of the Affirm card, both the virtual and physical versions.
Okay.
More and more merchants are opting to partner with Affirm's card-issuing partners as a way to seamlessly integrate Affirm services into their checkout process.
So it's not just about directly offering loans anymore.
Right.
It's about becoming an integral part of the broader payments ecosystem.
Exactly. They're weaving themselves into the very fabric of online and offline commerce.
Now, if we take a closer look at the numbers,
Okay.
while transactions per active customer are going up, the average order value is actually down.
That's where it gets really interesting. See, this could point to a deliberate shift in Affirm's strategy.
Okay.
Perhaps they're focusing on smaller, more frequent transactions, indicating a move towards everyday purchases rather than just those big-ticket items.
Interesting.
What does this tell us about their long-term vision? Are they aiming to become the go-to payment method for your daily coffee or groceries?
Right.
That's a question worth pondering.
Okay. That is fascinating. So they're playing the long game, going for volume over individual transaction size.
Right.
It's all about becoming a part of daily spending habits. Now, we can't ignore the elephant in the room, the current macroeconomic climate.
Ah, yes, those ever-present factors of inflation, rising interest rates,
Right.
and the looming possibility of a recession.
It definitely has everyone thinking twice about spending and borrowing, especially for those big-ticket items.
This creates a fascinating dynamic for a company like Affirm. On one hand, economic uncertainty might make consumers wary of taking on debt,
Right.
but on the other,
Yeah.
it could make those flexible payment options even more appealing,
Yeah.
especially if people are feeling the pinch of rising prices.
So it's a double-edged sword.
It is.
It all comes down to how a firm manages this delicate balancing act, right?
Absolutely.
Yeah.
And that's precisely why understanding how they're managing risk and navigating these choppy economic waters is so crucial.
All right, let's dive into that then.
Yeah.
One of the strategies they're using is offering loan modifications to those borrowers
Yeah,
facing financial difficulties.
exactly. They're not simply taking a hard line and demanding repayment.
Right.
They've got strategies in place to help people stay afloat
Uh-huh.
and keep up with those payments.
Okay.
It's a smart move, showing both compassion and an understanding of the current economic realities.
These strategies include things like payment deferrals,
Right.
which essentially hit the pause button on a borrower's next payment,
Yeah.
and loan reamortizations,
Mhm.
which basically restructure the loan
Right.
to make those monthly payments a bit easier to manage.
Yes,
By stretching out the repayment period, it's a delicate balancing act,
it is.
supporting consumers while also ensuring the long-term stability of their own business model.
And that's a key point. Investors are keeping a close eye on how effectively a firm manages this risk.
Especially with all these economic storm clouds gathering on the horizon.
Now, speaking of investors,
Mhm.
let's unpack a couple of intriguing details from their 10Q filing.
Okay.
Affirm has some pretty significant commercial agreements with Amazon and Shopify,
Right.
which are having a notable impact on their financials.
These partnerships are definitely worth a closer look, for instance.
Okay.
As part of their deal with Amazon, Affirm granted warrants that resulted in $112.5 million in expenses for them this past quarter.
That's a considerable cost,
It is.
but it also reflects the value they place on this particular partnership.
Precisely. And it seems to be paying off Amazon's gross merchandise volume, or GMV,
Right.
accounted for a substantial 23% of Affirm's total GMV in Q3 2024.
That's a jump from less than 20% in the same quarter last year,
Yeah.
highlighting the growing importance of this collaboration.
It's a clear sign that this partnership is playing a pivotal role in Affirm's growth strategy. So they're putting their money where their mouth is and reaping the benefits of this strategic alliance.
Now, if we step back and look at this part of the deep dive,
Yeah.
what stands out to you? What's the most significant takeaway so far?
What really grabs my attention is this fascinating push and pull between Affirm's impressive growth and the looming challenges of the macroeconomic landscape.
Yeah.
They're clearly winning over consumers and widening their reach,
Right.
but they're doing so at a time when economic uncertainties could throw a wrench in the works.
You hit the nail on the head. It's going to be fascinating to see how they adapt and innovate to stay ahead of the curve.
Absolutely. And that's exactly what we're going to explore further as we continue our deep dive into Affirm Holdings. Stay tuned.
All right, so let's unpack how Affirm is tackling those challenges we just outlined.
Okay.
We touched on their loan modification strategies.
Yeah. Those payment deferrals and loan reamortizations are interesting.
Yeah.
Seems like a smart move to offer borrowers some breathing room when they need it most.
It's a delicate balance, though.
Right.
If a large number of borrowers start needing these modifications,
Yeah.
it could signal some underlying issues with their lending practices.
That's a good point. It's
Yeah.
definitely something to keep a close eye on. But beyond those modifications, what other risk management strategies are they employing?
Well, it all starts with their underwriting process.
Okay.
They're incredibly data-driven, using their proprietary iTax model to assess creditworthiness.
Okay. For those of us who aren't financial whizzes, can you remind us what iTax is all about?
Sure, iTax stands for their Internal Credit Quality Score.
Okay.
It's a step beyond those traditional credit scores, taking into account a much wider range of factors.
So they're not just looking at someone's FICO score.
Right. They're digging deeper,
Okay.
analyzing things like repayment history on the Affirm platform itself, current credit utilization,
Okay.
and even factoring in legal and policy changes that could impact borrowers' ability to repay.
Wow. So they're really casting a wide net.
Yeah.
Trying to gather as much information as possible
Right.
before making a lending decision.
Exactly.
To be proactive rather than reactive.
Absolutely. They want to identify potential risks early on and mitigate them as much as possible.
Okay.
And it doesn't stop there. They also keep a very close eye on the performance of their loan portfolio.
So they're not just approving loans and hoping for the best?
Not at all. They're constantly monitoring key metrics, like delinquency rates and charge-offs,
Okay.
to understand how different segments of their borrowers are performing.
Right.
This helps them to adjust their risk strategies as needed.
So it's like a constant feedback loop.
Yeah,
Using data to learn and improve their approach.
exactly. They're taking what they learned from the data, refining their models,
Okay.
making more informed decisions every step of the way. It's a very dynamic approach,
Right.
which is essential in an industry as fast-paced as buy now, pay later.
Now, another piece of their risk management puzzle is their funding model. You mentioned earlier that they rely on warehouse credit facilities,
Right.
securitization trusts, and forward flow arrangements.
Yeah.
Sounded like they were diversifying their funding sources.
They are.
Is that part of their risk management approach?
It definitely plays a crucial role.
Okay.
By spreading their risk across different funding channels, they're less vulnerable to any single source drying up.
So if one funding source becomes more expensive or less available,
Right.
they have other options to tap into.
Exactly.
It's like having a financial safety net.
Precisely.
Yeah.
It gives them more flexibility and resilience in a market that can be quite volatile.
Makes sense. Now, one thing I'm curious about is how they balance this need for growth with the need for responsible lending. It seems like a tricky balancing act.
It's a constant tension, for sure.
Right.
As a publicly traded company, they're under pressure to deliver strong financial results.
Right.
This often means growing their loan portfolio and boosting revenue.
But if they grow too aggressively or lend to borrowers who are unlikely to repay, it could backfire spectacularly.
Yeah. That could lead to higher delinquencies, charge-offs, and ultimately significant financial losses.
Okay.
So they need to find that sweet spot,
Right.
that delicate balance between pursuing growth and ensuring long-term sustainability.
It sounds like a high-stakes dance.
It is. And it's something that investors are scrutinizing very closely.
Right.
They want to see clear evidence that a firm can grow responsibly without compromising the quality of their loan portfolios.
Okay, so let's shift gears and talk about regulatory developments.
Okay.
You mentioned the CFPB, the Consumer Financial Protection Bureau. How are they impacting the buy now, pay later space?
The CFPB is increasingly focused on consumer protection within this industry.
Right.
They're looking at potential risks to consumers, such as overborrowing and debt accumulation.
So they're essentially the watchdogs, making sure consumers are protected.
Right. They're actively gathering data, conducting research, considering potential rule changes to address these concerns.
What kind of rule changes are we talking about here?
Well, some possibilities include requiring buy now, pay later providers to conduct more thorough affordability checks before extending credit.
So it's all about ensuring borrowers can actually afford to repay what they're borrowing.
Exactly. They're also looking into things like limiting late fees and making those disclosures to consumers much clearer and more transparent.
So giving consumers a crystal clear understanding of the terms, costs, and potential risks associated with these products.
Precisely. And it's not just the CFPB keeping a close watch.
Okay.
Other regulators, both at the state and federal level, are starting to pay more attention to the buy now, pay later industry.
It seems like the regulatory landscape is becoming a lot more complex for companies like Affirm.
It definitely is. This means that Affirm and other players in this space need to be adaptable and proactive. They can't afford to just sit back and wait to see what happens.
Okay.
They need to anticipate those potential regulatory changes and be ready to adjust their business practices accordingly.
Otherwise, they risk facing fines penalties
Right.
or even restrictions on their operations. That could be a significant blow.
You got it. Regulatory compliance is now a key part of their risk management strategy.
Right. So let's talk about the competitive landscape.
Okay.
How is Affirm positioned compared to other players in the buy now, pay later space?
Well, it's a crowded market
Yeah.
with a lot of competition, both from other fintech startups and from those big established financial institutions.
So what are some of Affirm's key competitive advantages?
Okay.
What makes them stand out from the crowd?
Their technology and data analytics capabilities are definitely major strengths.
Okay.
They have a sophisticated platform and a strong team of engineers and data scientists.
Which allows them to make more accurate credit decisions.
Right.
Tailor financing options.
Right.
And manage risk effectively. It all comes back to that data-driven approach.
Right. Another advantage is their focus on transparency
Okay.
and consumer-friendly practices. They're really trying to build a reputation for being trustworthy,
Right.
and putting their customers first.
It seems like they're trying to build a brand that people can trust and rely on.
Exactly. And that's especially crucial in an industry that has sometimes been criticized
Yeah.
for predatory lending practices.
Right.
They're aiming to do things differently with a more ethical and consumer-centric approach.
So they're building a strong brand
Yeah.
and a loyal customer base.
Absolutely. They're investing heavily in marketing and strategic partnerships
Uh-huh.
to raise awareness and attract new users.
And those partnerships, especially the one with Amazon,
Right.
are a significant part of their growth strategy.
Definitely. These collaborations give them access to a much wider audience
Right.
and help them expand into new markets more quickly.
So they're leveraging these partnerships to gain a competitive edge and scale their business.
Precisely.
All right. It sounds like Affirm has a lot going for it,
They do.
but they're also facing some significant challenges.
Yeah.
It's a bit of a roller coaster ride.
It is. They're in a fascinating position. Now,
Yeah.
as we wrap up this part of our deep dive,
Uh-huh.
what's one question you think our listeners should be pondering?
The big question that keeps swirling in my mind is, can Affirm maintain this impressive growth trajectory
Yeah.
while navigating these increasingly choppy economic waters?
Right.
It's the million-dollar question, isn't it?
It is. They've proven they can scale and innovate.
Right?
But can they do so sustainably in a more challenging environment?
That's the question that will determine their future success.
Absolutely. And that's what we'll explore further in the final part of our deep dive,
Okay.
where we'll look ahead to Affirm's prospects and consider the factors that will likely shape their journey in the months and years to come. Stay tuned.
Welcome back to our deep dive into Affirm Holdings, Inc. We've covered their business model, financials, all those macroeconomic challenges.
Right?
The regulatory landscape, really gotten into the nitty-gritty.
We've peeled back the layers, haven't we?
We have, and now it's time to gaze into our crystal ball.
Okay.
Look ahead. What does the future hold for Affirm?
The big question.
What are the key factors that'll determine their success?
Well, as we've been discussing, that macroeconomic environment is really going to continue playing a major role.
Right. Inflation, interest rates, consumer confidence.
Exactly. All those things are going to influence demand for Affirm's products.
Makes you wonder, if the economy takes a downturn, will consumers be more hesitant to take on debt?
It's certainly a possibility.
Could put a damper on growth.
It could, but there's also the flip side.
Oh.
You know, if inflation remains high, those flexible payment options offered by Affirm might become even more attractive.
Right. For those consumers struggling to keep up.
Exactly.
It's a complex web.
It is.
But let's shift gears a little bit and talk about Affirm's internal strategies.
Okay.
What are they doing to position themselves for success, regardless of what the economy throws at them?
Well, one thing that's clear is their continued investment in technology and data analytics.
Okay.
They really view this as a key differentiator,
Uh-huh.
allowing them to, make those smarter lending decisions.
Manage risk more effectively.
Exact.
So they're doubling down on what they do best.
Right. Harnessing the power of data.
And they're not just sticking to buy now, pay later either.
No, they're not.
Expanding their offerings and partnerships, building a whole financial ecosystem.
You're absolutely right. They've got their sights set on becoming a more comprehensive financial platform,
Interesting.
exploring things like savings accounts,
Okay.
virtual cards,
No.
really thinking outside the box.
Definitely not afraid to explore new avenues.
No.
And those partnerships, we can't forget those.
Okay.
Especially the one with Amazon.
Right.
Significant part of their growth strategy.
Definitely tapping into a wider audience, expanding into new markets.
So it's all about staying agile,
Yes.
adapting to the changing landscape,
Absolutely.
finding new ways to connect with consumers.
It is.
Now, one thing we haven't touched on much is their social impact.
Oh, that's important.
Affirm has stated this commitment to financial inclusion,
Right.
empowering consumers. How does that fit into their overall strategy?
That's a great question.
Yeah.
Their social mission is very deeply intertwined with their business model.
Okay.
They believe everyone should have access to fair and transparent financial products,
Makes sense.
regardless of their background or credit history.
So they're using technology to make financial services more accessible,
Precisely. Leveling the playing field.
more affordable.
Yes. And it's a trend we're seeing more and more in the tech world.
Mm-hmm.
Companies realizing they can do well by doing good.
It's a win-win.
It is.
Consumers are becoming more conscious of a company's values,
Absolutely.
more likely to support businesses that align with their own beliefs.
It's not just about good ethics.
Right.
It's a smart business strategy.
Inspiring to see companies like Affirm integrating social impact into their core mission.
It is.
Now, as we wrap up this deep dive into Affirm,
Okay.
what's your final takeaway for our listener?
Well, Affirm is a company standing at a crossroads.
Okay.
They've achieved remarkable growth,
They have.
but they're facing some strong headwinds.
Right.
Macroeconomic environment,
Uh-huh.
increasing regulatory scrutiny,
Future success, far from guaranteed.
and many challenges ahead. But they also possess some really powerful strength.
Okay.
A strong team,
Yeah.
data-driven culture.
Passionate, I'd say.
They are. And an unwavering commitment to innovation.
It's a captivating story.
Yes,
It's disrupting an entire industry.
Absolutely.
It'll be fascinating to watch how they navigate the complexities of growth,
It will.
forge their own path in the financial world.
One question that lingers in my mind is this.
Yeah.
How will Affirm balance its growth ambitions with the need for responsible lending?
And consumer protection.
Exactly. It's a complex question with no easy answers.
A question that will shape not only Affirm's future,
Right.
but also the future of the entire buy now, pay later landscape.
A story that's still being written.
Still being written, and we'll be watching with great interest to see how it unfolds. Thank you for joining us on this deep dive into the world of Affirm Holdings.
It's been a pleasure.
We hope you found it insightful,